If we are to be successful, this will need to be handled with tact.
What is fundamental analysis? Fundamental analysis is a method used for assessing the intrinsic value of a company and to analyze the factors that could influence its price in the future, obtaining an objective valuation of it, in order to make the best investment decisions. This type of analysis is based on the evaluation of assets through external events and influences as well as all available information of the firm reflected in its financial statements, in addition to industrial trends. What is fundamental analysis used for? Fundamental analysis is one of the two main methods used to analyze the market. The other is technical analysis, which is used by investors to get all the information they need to trade from the charts. Investors who ground on fundamental analysis focus on external factors, unrelated to movements in the price of the asset itself. By a careful analysis of that kind of information, investors might have a clue into what would become an investable equity. In short, the fundamental analysis consists of a detailed investigation of the history, current situation, and perspectives of the companies, taking into account the following aspects. Financial situation based on the figures of the balance sheet and the income statement, dimension of the company, market penetration, degree of technological development, sectorial situation with respect to both similar national and foreign companies, market valuation, etc. Based on the application of different techniques, the fundamental analysis defines the trends of the shares, their estimated performance and marketability, also weighing the real or probable effects derived from the changes in the macroeconomic variables, which refers to analyzing the political, economic and fiscal events that may influence equity prices. Notions of valuation. Fundamental analysis seeks to elicit value from looking at more accounting and market-based measures and to think in terms of what constitutes value. In fundamental analysis, two distinctions are made. There is a notion of comparable valuation, or what is sometimes called relative valuation, as opposed to intrinsic valuation or discounted cash flow valuation. The most classic way of thinking about a comparable valuation is to look at a price-earnings ratio, PE. Comparing the price of a company's stock to the earnings it manages to generate. What does the analysis of the financial information of a company pursue? The analysis of the financial information of a company seeks to know the level of growth that we can expect from that company in the future and limit the existing risk in three fields. 1. Business, defined as the uncertainty of profits and cash flows that depend on sales and the level of operating leverage. 2. Financial leverage, ability to meet the payments of debts contracted that are due, as well as in terms of its structure, that is, which part is long-term and how much is in short-term. 3. External financing, ability to finance investments with external capital. Financial ratios. The financial ratios are powerful tools to help summarize financial statements and the health of a company. These ratios generally fall within one of four types of measurements: profitability, liquidity, solvency, and valuation. Understanding and applying ratios from all of these categories can enable investors to make smarter stock purchases and potentially avoid hefty losses. Until next time, trade safe.